6:30. So, well, good. All right. Well, let's get started. My name is Jim Sheils. I am partner here at Southern Impression Homes. We are a turnkey new construction company. Turnkey rentals started right after 2008. Pick homes that got fixed up and fully managed for investors out of the area to come into. We kind of took it to a different level about 10 years ago where we stopped fixing up old houses and we only do new construction now for a number of reasons. Some I'm sure Chad and I will talk about today. And we focus on residential, single family, duplex, and quads. We're in a lot of high growth markets in Florida. Funny thing is, you won't see us in Tampa. You won't see us in Orlando. You won't see us in Miami. Reason why is it's our job to find the best markets for what we feel will have growth, have a little more safety score to them with the buy-in amount and being able to cash flow right off the bat. And these are the markets that we've identified to be high growth for at least the next 5 to 7 years. Some of you know, and we probably have a lot of people on here, maybe from our White Coat community or another one of our big podcast partners. You know, we've worked with some of the largest real estate educators in the world, really, for the last 10 years with our new construction model. And we have a very simple goal. Our goal is to make sure that you can spend time with the people that you want to be with, doing the things you want to do, and not create a second or third career or not have the ability to retire or have a second income supporting the things that you really desire to do. So what we do is we build successful rental portfolios, and we have three pieces to that. We're going to help you build the property right. We're going to finance the property right for you. And then we're going to manage the property right for you. And going through almost 26 years in this game, I know if we can solve those three things for you, then we have a great chance for doing for you what we've done for so many others, and that's build successful real estate portfolios they can depend on month after month for not only cash flow now, but long-term generational wealth. Right now, we are almost at $1 billion under asset management, which is exciting. It's producing almost $56 million annually in recurring revenue for our clients. In recent years, we've created almost $200 million in equity for our investors. And we currently work with a little over 1,000 investors, and that's growing every week. We've built over 9,000 properties. It houses over 10,000 residents. And our team, again, it's not just, you know, me and Caitlin and Chad and Allison on here. There's another 120 people in our direct office that help make this turnkey new construction rental property management happen. So to get started with us, it's an $80,000 minimum investment. I like to say that right up front. Sometimes we're a match for people, sometimes we're not. But we know that if you have $80,000 in savings that you're ready to start building your rental portfolio with, that we can build you a portfolio like we have so many others. Also, we are right now at a little over 5,000 lots in Florida, in those markets that I showed you earlier. And our goal is to build them out over the next few years with our recipe of single family, duplex, and quads. Now, why real estate? I was asked this question, or I asked this question 27 years ago when I first started to get into learning this game. And I kept coming back to this, that 90% of all millionaires became that way through owning real estate. And I like those odds. I like the tangibility of real estate. It made sense to me right away. And it has absolutely changed the life that I've been able to have with me, my wife, my 5 children, my friends, my hobbies, the passion projects and service and contribution I try to do has all been from my real estate. We did recently, my wife and I released a book that was not only our writing, but my partner's writing, everyone here on this call, many of our case studies coming from our clients, and it did hit a USA Today bestseller, which we're excited about. And it's about our journey. We tried to find the playbook for how can you really not fall off the line and take the wrong direction like so many real estate investors do, and have that straighter line to, again, passive income, less headaches, less time, better equity growth. That's our goal through our system. When we talk about kind of the evolution of that and the principles that we've uncovered, not only for ourselves, but many of our existing clients. Anyone who's on this call tonight, you will be able to put in the chat box, please send me a copy of the book. Caitlin will get everyone's names down, and like last month, we'll send you out a copy of the book. It is a really good read if you are trying to niche down into something in real estate that you can really depend on and work through and not be scattered. So many real estate investors I know say, gosh, I just feel scattered. This can help give you some really good direction. So tonight we're here, which I'm most excited about, with Chad Emerson. Chad has been an absolute backbone of the financing and our special in-house financing rates for a number of years now. And I just want to open up to some dialogue with him so everyone could hear, because you guys have been coming to us with questions. And I said, look, let's just all get on and powwow so we can talk about it. Chad, good to see you again. Thanks for being here tonight.
Hey, thanks for having me, Jim.
Yeah, so we've had some interesting things happening. Let's start first of all. I know you hear this question probably 6,000 times a day. What's going on with interest rates? The Fed's cut rates. Did that help? What's happening with mortgages? Where are we at?
Wow, that's a pretty big book. So, yeah, I mean, mortgage rates, everybody got the word, that the Federal Reserve cut the Federal Reserve rate. Just want people to understand that just because they cut the Federal Reserve rate doesn't mean that they're cutting mortgage rates. Okay. But there is a direct correlation oftentimes. However, our economy is super strong right now. And when you have a strong economy, that does not spur a whole lot of, you know, cutting of the interest rate, so to speak, from the Federal Reserve, right? So it's not that we hope for bad news, but oftentimes if you're hoping for more favorable interest rates, you're actually you're betting against the economy, so to speak. And but a lot of people have said, well, everybody said that the rates were going to drop as soon as the Federal Reserve cut rates, and they did for about 2 days. But then they revised some numbers, as often they do. There's estimates put out there as far as certain things in the industry, such as job creation, right? Well, it turns out there was a miss in the job creation count, and they underestimated by about 120,000 jobs. So 120,000 more jobs than anticipated were created at the end of September. And so that basically caused a spike in the 10-year. So rates started to have been creeping back up again.
And
Uh,
that 10-year, Chad, that is really the barometer for mortgage interest rates, is it not? And that's pretty much the biggest indicator for where we're heading.
it is. It really is. And oftentimes, if you're looking for like a real basic, layman's barometer, for lack of a better term, as far as where interest rates are, just look at how the stock market's doing, because they usually work against each other, right? So typically, a good day in the stock market can not be favorable for interest rates. But then sometimes you may see that, maybe the Dow's dropping a few hundred points. Well, oftentimes what those day traders will do is they'll move money into the bond market, because it's the safe haven, so to speak, of a good place to put your money, to park it until you decide what to do with it, right? So during uncertain times, they're going to put more money into the stock market, or I mean, into the bond market. When they do that, that actually raises the value of the bonds. And the bond market is where the mortgage-backed securities, or the MBS, are located.
Yeah.
So the more money in the bond market, better it is for mortgage rates.
Yeah. So we're not sure what's going to happen. And there's a couple of things playing out here right now, Chad. We got an election, and I'd
Mhm.
love to get your opinion on that. You've obviously been at the helm of mortgage companies through a few elections now. It always seems to be a little bit of a staticky time that I've seen, but I'd love to get your take on that. And kind of what are you seeing for mortgage rates over the next 3 to 6 months?
Okay. So there's a lot of people have their own opinion of what's going to happen with the election, right? I've heard everything. People say that if Donald Trump is elected president, you're going to see rates go sky high. Um, I don't know if I really subscribe to that. And then just using that as an example, because I remember the last election back in 2016, when President Trump, or former President Trump, was elected president. We did see the stock market tanked about 1,200 points. And then by the end of the day, stock market was up. So there's going to be a lot of knee-jerk reaction. Don't get too concerned, or don't invest too much time into what the stock markets, or what the election is going to do to your mortgage rates or your portfolios. You just got to kind of let the dust settle, so to speak.
Yeah.
Now, I think the general direction for rates, if I look in my foggy glass here, but I would say it's more than likely going to be general direction is going to be down. But
Yeah.
keep in mind, as rates are dropping, there's going to be a lot of those peaks and valleys, right? And that's where I come in because I can generally give people good guidance as to, when's going to be the best time to lock in. If it's more favorable, be prepared to do it quickly because, usually it's going to be short-lived rallies, right?
Yeah.
Um, and I think that probably there's the consensus is we'll see two more rate cuts. They're saying at the end of November potentially, and then again at the end of December. But as we saw from the last rate cut, we're not really sure if that's going to take hold or if it's going to cause rates to go down quickly. I don't think it'll be a quick drop. I think it's going to be a very slow, methodical lowering of interest rates, probably going to be about 2 to 2.5 years before rates are at their lowest point again. Because keep in
Right.
mind, rates are at their highest point they've been in 35 years.
Yeah.
So it'll take a little bit,
Yeah.
but
Well, and the interesting thing, Chad, which obviously is how we teamed up a few years ago, June of 2022, remember we're going, what the heck? And it was that hockey stick of rates, like you said, bringing us to over a 30-year high now. But
mhm,
that's how when we teamed up with you to try to ignore the normal mortgage market and go into these builder forward commitments.
right.
And, I want to make sure people understand what that is because a lot of our clients are saying, I want to wait for rates to drop, which I totally respect. And being an investor myself, it's something I always look for. But obviously, Chad, the builder forward commitment kind of changes the rules on that. Do you want to explain to people what it is and almost the difference of like where we're able to team up and do bulk with someone like you, what we can get at with ourselves and our clients compared to like the normal market today?
Yeah, absolutely. So if you're impatient like myself, I hate waiting for stuff, right? I'm not the kind of investor that can sit there and wait for the rates to drop and then pounce on it when the market's right. And I'll get into that in a minute why it's actually a losing battle. But as far as the builder forward commitment, you can actually get into a lower than market rate right now, significantly lower, by purchasing a Southern Impression home and using me as your lender, because we actually will do a separate transaction with the builder. Southern Impression will actually purchase a specific stack of money at a predetermined interest rate. It's the best way I can explain it. You're
Yep.
basically reserving the money that you can turn around and offer it to your clients, provided that they purchase one of your properties and they use me as the lender.
Yep.
So, we've got some rates, I mean, ridiculous right now. It's 3.75. You just can't find that anywhere.
And
Um,
3.75, Chad, that's our most popular rate night right now. If we weren't pre-buying the money and buying in bulk and the fees that we pay up front to reserve this money, what would that same loan possibly be for that same loan product on a duplex, not going through where we're at? Just out of curiosity right now.
Probably be close. We're upwards of 8% right now.
So 8%. It's even higher than I used to say 7 and a quarter. We're now at 8% for that
Yeah, the
same.
standard rates are in the sevens, the mid sevens, but you got to keep in mind that there's a couple of additions to that rate when you're dealing with investment property, right? What banks and lenders do is it's called risk-based pricing. So they look at a property, and if it's like a couple of units, they're going to add a little bit of fat to that, so to speak. Same thing if it's not owner occupied, they look at that as a potential risk too. Even though you and I could, probably explain that away in minutes, but that's just the way lenders operate.
Yep.
And then they add those hits, for lack of a better term, to those interest rates. So that's why you're probably, if the standard rate is 7.5, you can pretty much add about 0.5% to that for an investment duplex, for example.
Wow. Yeah. So and again, that's why we created this because as everyone said, and I'd like to get your take on this, what I keep hearing is over the next 12 months, rates will continue to go down, which will put more pressure on buyers and investors re-entering the market. And we're still on a more of a housing shortage in some key areas. So it's going to put a more pressure on pricing.
Right.
Would you agree with that?
100%. So that's why I say, it's kind of a losing proposition to sit on the fence and wait, because there's a couple things at play here. Number one, when you are on the fence and you're waiting for those rates to drop, number one, you're hoping that the rates drop. You don't really know if that's going to happen, or as I alluded to earlier, it's not going to happen very quickly. So your backside might get a little sore from sitting on that fence too long. But also, when those rates do drop, and everybody is going to know that, all those fence sitters are jumping off the fence, right? And you've got a mad rush, everybody at the same time going towards that property. And now you've got a couple things. You're competing against a larger pool of people. You're also going to be competing against prices rising in the meantime. And then just when demand goes up like that, it's simple rules of economics. I mean, when demand goes up, prices go up, right?
Yeah.
So and then it becomes a seller's market, and you're kind of kicking yourself for sitting on the fence waiting. So that's kind of the con to waiting, right? But with these builder forward commitments, you don't have to wait. You don't have to sit on the fence and wait for that rate. You can get a fantastic rate right now. You can get in while prices are still reasonable, and you're competing. Those that know about it are competing against with a much smaller pool of investors. So if you're thinking about buying and getting into an investment property, you don't have to worry about the rates dropping. We've already got the low rates. So hop in and get one now while you can.
I think some of the confusion too, Chad, and this again was a big question that was coming at me on a bunch of podcasts I was on, also a lot of our property counselors, was okay, yeah, but you're at, let's say we're at 3.75, and like you said, for a duplex, let's say normal mortgage rate right now is, let's say for that same loan without us doing the builder forward, 8%. People are going, yeah, but I'll wait for three more rate drops. Let's say if the feds drop the rates a half a point each time. So the next three drops, let's say over the next 6 months, were a half a point each, which would be significant. And we can't tell what the 10-year is doing. Do you think, and this is what people say, well, if there's 3 or 4 rate drops, I might be down at your 3.75. I just wanted to get your opinion. Where do you think, based on your history in the game, if we got 3 really good rate drops, would it go from 8 down to 4? Would it go down from 8 to 6.25? I'm just curious on gauging that.
Yeah, so it's not linear like that. When and this is, I want to make a distinction between mortgage rates and the Federal Reserve rate, right? So when you hear the Federal Reserve rate, like what happened at the end of September, they cut their Federal Reserve rate by 0.50 or 50 bips, 50 basis points, right? All they're doing is they're cutting the rate that they charge, because when banks around the country, when they need money, they go to the Federal Reserve and they borrow money from the Federal Reserve, and then they pay a rate, just like a borrower does when they come to a lender to buy an investment property, they're paying a rate. Well, just because the Federal Reserve cut the Federal Reserve rate doesn't mean that had any direct effect on mortgage rates. Now, there is a correlation with that. If they're cutting the Federal Reserve rate, typically mortgage rates will follow. But as we talked about earlier, anything in the economy can pretty much negate that, or it can work against it, like we've seen over the past 45 days or so since the last cut. So it really depends on what else is going on in the economy, not just the rate cut. But I would say if you had 3 significant rate cuts, and the economy is in the shape it is right now, which is really good, you might see, boy, it's tough to say, maybe a 0.5% reduction in interest rates.
Wow.
And you might be able to get into something like around 7 or 7.5, 7 at the best. You're still not going to. I think a lot of people have forgotten how much damage has been done over the past few years with the multiple increases we've had in the Federal Reserve rate. That it's kind of set the tone for mortgage rates.
Yes. Good. Okay. And one question before I open up to other questions, Chad. You've continued to fund our projects. Obviously, we have a pretty big working relationship now. Why do you guys continue to have so much faith in our new construction model and what we're doing? I mean, you're putting up anywhere from 85 75% every property we do. And, that's a question we've had. How comfortable is the bank with you guys?
How comfortable are we with Southern Impression?
Yeah, with our product and loaning against our homes.
Well, I mean, we would not have, there is an approval process it takes for us to, approve a builder that will work with them, right? Not going to go into the boring details, but it's pretty rigorous. We look at past performance, we look at the product itself. And typically it can take up to a week or two to get that approval to work with a builder. I got your approval in about 48 hours. So they
Wow.
really like the product. I think that, I mean, your prices are much lower than, I've worked with other builders too. Your prices are excellent. Your cash flow is great. We love Florida right now, especially because Florida is it. I'm located in San Antonio, Texas, but Florida reminds me a lot of Texas about 18 years ago when I first came down here. It's we experienced a lot of rapid appreciation here in Texas, and we're still doing pretty well. It's not quite to the tune we were about, a couple decades ago. But right now, Florida is the second fastest appreciating state in the country,
Mm.
behind only California. It used to be California, New York, and then Florida. Florida just leapfrogged New York. I want to say maybe 4 or 5 months ago.
Well,
I think that speaks volumes of, they're doing things right down there in Florida.
yeah. And how have you seen hurricane issues? As you know, because you're involved with a lot of our properties, we didn't have any damage in any of our markets. Um, Another reason we love new construction because of the higher ground you build on, the stronger fasteners. Have you had any trouble? Because you guys won't lend on a property unless you can get the insurance to go with it. So obviously you're requiring insurance. Have you seen any insurance problems getting insurance on the new construction? Just out of curiosity.
No, I really haven't. And that's kind of a misnomer about Florida. Oftentimes, memories are short. People think about all the hurricanes, but truth be told, as far as when you're dealing with new construction, the rates aren't that high in new construction in Florida. In fact, they're actually a little bit lower than some new construction rates I see here in Texas,
Yeah.
where it's, as dry as a desert in some places. So that's the first thing. So don't be fooled. It's not now if you're looking at a 30 or 40-year home in Florida, or if you're buying one of those, rehab homes, you're probably going to pay an arm and a leg for a decent insurance policy. So new construction definitely the way to go. It's going to be a lot cheaper. And also one thing too is at least with Southern Impressions, it seems like you guys are pretty well insulated from the hurricanes. I mean, um, I don't think we've seen any significant damage to any of the properties. Now, truth be told, though, if we do have a hurricane rip through Florida, we also have to send out the appraisers to do what we call it's a DARE report. So anytime you've got a certain county in Florida that's considered disaster area, we're required to send the appraiser back out real quick just to make sure there hasn't been any damage.
Mhm.
So if you don't live in the area, if you're not a state investor, at least you're not just taking the builder's word for it. You're taking the lender's word for it too, and we have to send an appraiser back out to verify it's still working and there's no damage to the property. Uh, so
I think that's great. That's great. Yeah, we haven't had any problems either. Again, insurance is all about risk. And when, they changed the rules in 2004 after Hurricane Charlie, you got to build at, much higher ground, stronger fasteners. They see it as much less risk. Another thing, as you know, even though we're in coastal areas, we usually build most of our product like a couple miles inland. And that right there at a minimum makes a change. So good to hear that. I haven't even talked to you since the hurricanes, which is a good thing. All those going through, and there was nothing we needed to talk on, which was kind of nice. But let's open it up for questions. Want to make sure if you guys have any questions on the market, on anything happening with rental demand in Florida, any questions for Chad? Chad, actually, I will start with one that I know came in right before. Do you want to talk a little bit about the programs we have right now? How much down? Basic qualifications for one of our mortgages?
sure. So um, right now we've got two main products, right? We've got the 10-6 arm, And there's also the 30-year fixed rates. Now, the draw with the 10-6 arms, just to keep in mind, is you can actually go deeper on those interest rates, right? You can go a little bit lower. I believe the lowest rate we have right now on the 10-6 arm is actually you can get as low as 3.75.
Mm.
Um, you can go the lowest you can get on the 30-year fixed rates is 4.25. Okay, so that's the first thing. As far as down payment, it used to be 25% down was the norm for everything, but recently Southern Impression introduced a 20% down option if it's a single family. Okay. So you can get in as little as 20% down on the single families. It's always going to be 25 for a duplex, triplex, or fourplex. I don't think you have any triplexes. Those are pretty rare. Not too many people I
Yeah,
know.
not we built them in the very beginning, but it just seemed to either go duplex or quad. That streamlined our building operation
Yeah.
to simplify. So, well, good. That's so. Caitlin, do you have some questions in the chat that you might be able to pull up?
We do. We have several. Okay, so one of them was how hard is it to get insurance on these properties? I know we talked about it a little bit, but I don't know if you want to dive
So,
into
so
that.
yeah, right now, I'll just recap it. Right now, for our new construction, it's not hard at all because insurance companies are all about risk, and new construction property has to be built different and on higher ground. And again, a lot of as Chad alluded to, people think, oh, I can get insurance, but it's going to be an arm and a leg. Every time that someone thinks that and they haven't seen quotes yet, they're shocked at how cheap our new construction insurance actually is. So at this time, and again, if you want to just talk about property insurance, one of our counselors can actually give you a whole tutorial on how insurance works and in Florida. But it's not a problem, and people are almost always pleased with the actual rates are.
Okay, the next question is for Chad specifically. It says, Chad, can I use the available rates with 15-year term?
We can actually do a 15-year term. We just have to get approval from upper management at Southern Impression. We've done that for a couple of buyers. I'm not trying to sway anybody away from 15-year because we do have the product, but keep in mind that 15-year term, it kind of bucks the trend, right? When you're buying investment property, the goal is typically to stretch out those payments as much as you can because that's going to increase your cash flow, right? With a 15-year term, your payments are going to be higher, cash flow is going to be less. Yes, you pay it off sooner, but you can do the same thing with a 30-year term, just pay extra on your payments and just pay it off sooner that way. But we would have to get approval for it. But yeah, we've done it before. We can do it again.
Right.
Okay, the next one is for Jim. Can you speak about the interest rate protection program that Southern Impression just instituted?
Yeah, the interest protection program is basically to protect you saying, I don't want to wait, or I want to wait because rates are going to drop. And what we say is basically the rate protection is if rates were to drop in the time that you lock into closing below where we're at, then we will automatically pay for you to get that rate. So that way you're not really risking anything. We're going to ensure that you get the cheapest rate that would have been available. Because if I understand that's why people are waiting. Well, what if we lock in with you guys and then rates go way down? Well, then we're going to cover and match that lowest rate.
Okay, let's see, there's one more. Are the new construction homes duplexes negotiable in regards by price or other incentives beyond mortgage rate?
So right now, our incentive programs are not only the in-house financing with Chad, but we are also offering 2 years of free property management. That monthly management fee is waived for the first 2 years. Like you'll know if you've already, I know some people on here I saw have already bought properties with us. We're a builder and we build portfolios, with our properties. And with our clients, we always say, look, make an offer. We need to make money, we need to make margin. But we always encourage you to work with your property counselor and look at the properties that work best. And if you want to make an offer on something, make an offer. But the standard incentives we offer right now is the program with Chad. Right now, the most popular being 3.75. We see most people working through that, but there's other options. and then 2 years of free monthly management.
Okay, so another one is I saw that some of your properties are being sold as rented.
Yes. So that's the great thing right now. This is something I just want to break into real quick, which, Chad said we got approved in 48 hours. The reason why is not to not give us enough credit. We were partially acquired by Sumitomo Forestry about 2 years ago. They still give us the autonomy to run the company, and we retain a piece of ownership, but they paid off all of our bank debt and they fund all of our projects. We have zero bank debt. That is very rare for a builder of our size. And that also gives us a very strong balance sheet to be able to work with bigger groups like Chad's. What we're able to do now is we're able to build just on our own dime, which means that a lot of builders out there would have to say, okay, you want a duplex? Give us a 10% deposit and we'll start building it now and you'll get it in 10 months. With us, we're on a continual build cycle. We build the pre-construction on our dime, and you can step in with a finished product right away. So like Chad last month with Allison, who's on here, I got the email, congratulations, 20-day closing. Allison and Chad worked together, got it closed in 20 days. So when you're getting new construction, the great thing with Sumitomo backing us now is we don't have to listen to banks. Banks have no authority over us with our building operation. A lot of builders, they do. Hey, we're not going to let you start building until you have a deposit in place, and then you can start building. For us, it's like, no, we're just going to build and then have them ready for people when they're ready. So you can close very quickly, and you don't have to worry about that in between phase of pre-construction.
Hey, Jim, that was actually in 13 days.
13. I'm sorry. I think there was a 20-day one too, wasn't there?
There's 20, yeah, under 20 days. That's just kind of the standard, but yeah, we did have a 13-day too.
Yeah, so you can the great thing is you can close quick. For a lot of the times when we were building years ago, I don't know if you guys know what a 1031 exchange is. We have a lot of clients coming out of different areas that sell a property with a lot of equity and they want to move it forward into a market like ours that's more affordable, has better cash flow numbers, better growth projections. And a 1031 exchange, though, has a rule that you have to be able to identify and close on that property in 6 months. Well, most builders, including us before, we wouldn't be able to do any 1031 exchanges because we never wanted to miss the deadline. You miss a deadline, there's all sorts of tax penalties, real yucky. We don't ever want to put a client through that. But now with this continual build cycle and Chad, closing in less than a month, we have no problem fulfilling 1031s either. So that's pretty exciting, especially with new construction. That's very rare.
Perfect. Okay, there's several other questions. So one of them is, whom does your management?
So our management is Suncoast Property Management. They are our sister company. When I first met my now partner, Chris, I had a large portfolio of properties. Him and his father owned the management company, Suncoast. And they took over my portfolio slowly but surely, did a better job than I did, which was great because when I left California as an investor and came here about 20 years ago, I hired and fired 4 property managers. Let me tell you, when you're doing that from a distance, it is very painful. But I was able to get in with Chris and Carter, who started the company, and then became such a close ally. I actually merged my company and become a partner with Southern Impression. So I've used Suncoast for years. We're managing a few thousand properties now. We always have management set up in a market before we go into it. In fact, a lot of people think we started as a builder and then got into management. It was actually the opposite. We were into management and then became a builder.
Okay, the next question, how can we see your properties? And I know there's a contact, Jim, the very last slide, I think, has some contact information if that helps.
Yeah, we'll get that on. So you'll be able to get different information on our properties. We have virtual tours. If you'd like to do an in-person tour, we love visitors. We always say that, come and visit, come take a tour, see the properties, see the team. It's a great way to get to learn the market. It's amazing what can happen in one day when you do that. But if you can't get here, we have all sorts of virtual tours of the properties and photos, so that way you can see them. Again, our property counselors are really there to advise you on how to best see these things. That's what they've done this, some of them hundreds of times, so they'll be able to run you through that. I'll get you contact info. Again, if you want to learn more about this, again, set a discovery call. We're just going to show you kind of our principles of real estate, why turnkey real estate might make sense for you or not. But they'll run you through some of the overall processes that we go through, from start to finish for you.
Perfect. Okay, so how much do you charge for property management?
The monthly fee is 8%, and that will be waived for the first 2 years.
Great. Okay. So Scott from Rockstar says, "Hey Jim, I was at the Rockstar presentation recently where you were showing a graph displaying a trend that we may be near a bottom in the market, indicating it may be a good time to buy now. You also talked about institutional investors being prevented from buying right now until rates drop more. Are you
Yes.
able to talk about this a bit more?"
Yes. So good to see you. I was up in Canada with our good friends. I'm sure a few of you are on here. Rockstar Real Estate. They have the largest real estate investing club in Canada. Been friends for years. And there's some interesting things happening in the US market right now. Chad hit on some of them. What is this 900 billion? Well, we also build for some of the big guys. We work for some of the hedge funds and institutions. And I could start naming the names, but you've heard about them. They're in Wall Street Journal all the time. These guys are very interested in residential real estate. They have a lot of money and they are pretty initiative driven. However, they have a disadvantage. They can't go to Chad. These big guys cannot go to Chad because the size of who they are and the companies that they're coming through, they require commercial financing, not residential financing. So when we were just out at the big commercial conference and I got to speak on the panel with a few of these groups, all their mouths were watering to be able to do what Chad does for our smaller individual investors like us, but these guys can't do that. So right now they're on the sidelines, and Chad will, I'm sure, attest to this. The residential rates, the mortgage rates, always go down first. The commercial rates are going to be slower to come down. However, these guys are very unemotional and again have about an estimated 900 billion on the sidelines, and they have a buy box, and their requirements are just outside that buy box. What that means is with a few more rates drop and the commercial market getting affected positively down, that money is going to come off the sidelines. That money is coming off the sidelines, and it is going to be quite interesting to see what that does to an already noted shortage in inventory, especially in key areas in the US. So that's going to be very interesting. The other thing that you're talking about is, I should have put that in tonight's webinar, but again, we're trying to keep it short. What that was a chart from ITR Economics. Now, ITR Economics has called everything right with like a 94% accuracy since about 1983. I've been following these guys for years. In fact, when we first started getting into build to rent, they wrote a best-selling book called Prosperity in the Age of Decline. And they talked about our type of properties, where they were going to be needed. What they've said right now is we are absolutely at a bottoming effect for real estate. We are about to go into what their prediction is, at least a 5+ year run of rental growth and value growth because of the interest being at a 26 years high, because affordability has already gotten better before interest rates have even dropped, because growth patterns are continuing, and because with all this supply chain issues and problems, we are still behind on needed inventory. We're still behind on needed inventory for the growth patterns that are happening in certain areas of the US and what has actually been built. We can't even keep up. And I think I showed some of the permits being pulled. We always watch permits being pulled. I don't want to get too deep into the weeds here, but permits being pulled for new construction have been so low these last 2 years due to the interest rate spikes. They are seeing an absolute rundown in inventory that came out in the beginning of this year. We called it the COVID inventory. It all got done at once. Where probably by about Q1 or Q2 of next year, we are going to have, by all measurements, an inventory shortage. So hopefully that explained it. I know I had to kind of sum it up, but that was a recap of what we talked about in Toronto.
Okay, Jim, I don't see any other questions.
Good. Well, listen, we try to do this every month. Hopefully this is going to open your eyes. It's always important to understand what financing options are available now. I mean, I got to tell you, I've been doing this 26 years. I had no idea what a builder forward commitment even was a few years ago. It was a huge education to me, and that's why we really wanted to talk about that tonight. What has Chad seen for the markets overall? And a lot of the rumors. I heard you can't get insurance in Florida. I heard that, there's not financing available. Hopefully we removed a few of the myths. And again, this is just the starting point. What I'd love to see you guys do is, if you're interested in doing one of our discovery calls, all this does is put you on a phone call with one of our property counselors that will talk to you about kind of our principles and give you kind of some guideposts of what we tell people to look for. We may be a good match for you, we may not, but at least you're going to know where you stand, and we can give you some, advice on which direction to move in, whether it's with us or not. Also, I want to remind you guys, so it's caitlin.shear@sihomesfl.com, or you can call this number, and we will match you with one of our property counselors. And that's the starting point. We can learn more about our company. We can learn more about you. What are your goals? Is turnkey real estate right for you? What areas of the U.S. do you really want to be in? What are the fundamentals you want to see in a market? We'll tell you what we look for. It's really a great educational call that is a good starting point, whatever direction you move in. So again, that's caitlin.shear@sihomesfl.com. And also, take us up on this. Again, this was a USA Today bestseller. All you have to do is get your home address or mailing address for your business, wherever you want it to go, for a copy of the book. If you joined us tonight, we'll be happy to send you one. We put a lot into this. This wasn't just me and my wife and our 25-year journey in real estate investing, but it was my partner, his father, our whole team, many of our clients. We've got Chad in there for the importance of good lending. So, check it out. We'd love to help you. I appreciate you joining us tonight. And Chad, thanks for joining us tonight. I know how busy you are. We're looking forward to seeing when this election ends, what's going to happen, in months ahead.
Anytime, Jim. Thanks for having me.
Great. All right. Well, thanks everybody. Have a great night. Thanks for joining us.